ETFs are growing like mad. There's nearly 1,000 of them available right now. Today, we inaugurate CNBC's model ETF portfolio. We've been working on this for a long time, folks. Baskets of ETFs around investment ideas. Go to my website, tradertalk.cnbc.com. Pull it up. You can look at all 6 portfolios. Joining me right now, Tom Lydon, ETF Trends editor, Jim Lowell, Fidelity Investor editor, who along with IndexUniverse.com editor Matt Hogan. These 3 guys divide these portfolios for us so that we could find better ways to do investing. Tom, thanks very much. Jim, let me just start with you. Tell me a little bit about why we came up with 6 portfolios. What's the idea behind them? How is it going to help people understand investing better?
We wanted to be able to cover the map of the market using ETFs and well-diversified portfolios delivered through fundamental analysis as well as some technical and quantitative measures. And so we're really able to cover the globe, whether you're taking a bearish perspective on this market, whether you think it's a sideways to a reflating environment, or whether you're a long-term bull. We've got 6 portfolios, well diversified and geared to a whole spectrum of different investors' risk tolerances and objectives.
And Tom, that's what I found so interesting about what you did. If you have an opinion on the market, if you think it's going to go to pot, there's a bear portfolio, there's a bull portfolio. Now, talk to me about this bull portfolio. If people think the global economy is going to be recovering, here's some ETFs that would benefit.
Well, that's the thing. You need to be diversified overseas. You have to have not only large cap, but small cap. So like the Vanguard all-world portfolio, it's got the RSP, which is the Ridex equal weight portfolio domestically. It's got the NASDAQ 2000. You've also got Power Shares base metals. You've also got Wisdom Tree small cap, international and small cap emerging markets, which are also very important.
So the point here is that there are 6, 7, 8 ETFs in the portfolio, and if the global market improves, they are likely recipients of that. They will be improving as well.
Through everything that we've seen, yes, and for the right price.
Now, Jim, of course, we've insisted, when I saw you guys, what you guys were doing, I insisted on putting in a global bear one for those people who think the world is going to pot, literally. How would this benefit? What kind of ETFs are in this one that would go up if the global markets went down?
Well, it holds several short positions. One that shorts the EFA, the broad measure of international markets. One that shorts the S&P 500. Obviously our domestic bellwether group. It also holds a short 20-year plus treasury, symbol TBF. And so on the short side of the market, it definitely tends to benefit when the market is selling off as a whole. But it also has some bond cushions inside of it. It's not just a pure short portfolio. One of the things that Tom, Matt, and I were determined to do was to deliver a risk-adjusted, disciplined, and diversified approach to each and every portfolio.
Now, Tom, you guys are going to meet on a regular basis, once a month or so, make adjustments to the portfolio. And I want everyone to know, I had nothing to do with this. I'm letting you guys handle this. My only instructions to you is get us a diversified portfolio depending upon your investment ideas, where you think the markets are
we'll report back monthly, and when we make changes, we report those back as well. And again, go into your website, you'll see everything on there.
TraderTalk.cnbc.com. Now, Jim, I have to ask you about what happened on May 6th. We're waiting for the SEC to issue a preliminary report. It may come out today, it may come out tomorrow. It's going to be out in the next couple of days. A lot of ETFs went down big time here. It worried me to see that. What are you telling your investors and the people who read your newsletter about what happened May 6th?
Well, we still are waiting, as you said, for absolute clarity on what happened. But nevertheless, it was a liquidity shock really across the board. ETFs certainly were not trading at NAV for at least a handful of minutes, if not a full half hour. But by the end of the day, they were, in fact, trading back at NAV. So whatever the cause, whatever the trigger, once that's known, it will immediately be scripted into from places like Power Shares, like iShares, like State Street. They want to make sure that their instruments are liquid and transparent and a better alternative than stocks, bonds, or mutual funds.
Now, we've got a portfolio for people who are worried about inflation. I got a lot of email people. How do you buy ETFs and protect yourself against inflation? You have a whole bunch of them in this particular inflation portfolio.
Yeah, and that's the thing. I mean, we may have inflation coming down the road. No signs of it yet, but we surely have a diversified group, mostly commodity-based, short-term treasuries, and again, short on the long side of the treasury curve.
Okay. Tom Lydon, Jim Lowell, always a pleasure to see you. And again, folks, TraderTalk.cnbc.com. That's my blog site. Go right there and you'll click on those model ETF portfolios right under my name, and you'll get all the information. You'll be able to compare it to other indices as well here.